What's up, everyone? Today, we're going to talk about three stocks that I recommend you to buy in 2026. And I actually have this in my portfolio. In this video, we're going to go over why and how come I recommend to buy these stocks in 2026. Now, at the end of the day, I'm not a financial guru. I'm not your financial advisor. So take this as a grain of sand. It's just something I added in my portfolio, which I had a pretty good return last year of 36%. So these are three of them that I have in my portfolio that I'm going to continue adding to in 2026. And I'll give you the reasons why in this video. Now, that being said, now, this is in my dividend portfolio, which is also my bridge account. If you don't know what that is, here's a video on what's dividend.
So what exactly are dividends? You ever heard of the term mailbox money, or getting paid while you sleep, or making money for doing essentially nothing? Publicly traded companies, right? These big corporations either make a profit or they don't. Now let's forget about the ones that don't make a profit for a second. Let's just focus on the ones that do. Have you ever thought about what these companies might do with those cash profits? What if I told you there was a group of them that have been taking those cash profits and paying those profits out in the form of cold hard cash to their investors every year for the last 40 years. That cash payment paid out to their investors every year is called a dividend.
And now here's a video about what's a bridge account.
You can utilize a normal savings account or a bridge account, which essentially is a non-retirement investment account that you can use to float you until you're old enough to tap into the retirement accounts.
So going into all that, let's go into this video and look at this stock so that you will understand reason why. The very first one I'm going to tell you about is Eli Lilly and Company. It's a pharmaceutical company. And let's go over what's more about that company. So Lilly is a medical company that helps with diabetes. And with the healthcare costs going up and the need of healthcare, and they're building new facilities, I believe this is a great stock to add due to the current situation with the baby boomers retiring. They need medication. And with just that being said, this company's going to have a great growth in the next 5 or 10 years, in my personal belief, just because I see it all day. I work in a hospital and I see people needing drugs. And this is one of the popular drugs that most doctors prescribe for medication, cancer treatment, diabetes, dermatology, and they're building more facility in America. So it's a great company to have. Now, let's look at the numbers and see what they have been doing. Last year, it grew 38%. That's phenomenal number for 1 year. And they have a growth based off AI 6 out of 6. So based off AI analysis and 30 other analysis, it's a strong buy. And they have a good financial standing with the gross margin at 81% and a net profit at 23%. So based off of all that information, they have a very good, strong portfolio. They're very good at company to have. And with the healthcare needs in the future, I believe this is a good one to add in 2026. Diabetes not cured yet. Cancer's not cured yet. And this is a drug company that makes the drugs to help with the treatment. And overall, this company has grew phenomenal. And just look at these numbers, and they just been growing. It also do pay a dividend. And if you're not looking for a dividend, it doesn't matter. I'm just added this to my dividend portfolio, but it done phenomenal last year, and I'm gonna add more. And the dividend yield is at 6.92. So upcoming year, I'll probably be adding more to this to my portfolio. Now, stock I'm gonna talk about is Broadcom. Now, if you don't know what Broadcom is a semiconductor. They make chips, they deal with Wi-Fi, data center solutions, and this upcoming year, I believe that this company is going to be needed for data centers. They need the software, they need the infrastructure, and this company helps with that solution. So, this is why I tell you to purchase this company this upcoming year because I believe they're going to be doing well. And them being with their product being wireless, wired connection, optical product, and mainframe software, these are all things that are gonna need for a data center. Let's go into Broadcom, see how it done last year. Last year, it did a phenomenal of 49.85% growth. AI gives this growth a 4 out of 6, and the earnings is phenomenal at gross margin at 67.89 and a net profit of 36.20. And I believe that since the data centers are going to be needed, they're going to have to purchase some from Broadcom. And the analysts, 48% analysts give this a strong buy. So with that being said, I believe this would be a great one to add to your portfolio. And the reason why we need data centers and you need the hardware. So semiconductors are gonna be needed, or the product from semiconductor. Now I could say NVIDIA, but NVIDIA makes really good graphic cards, they make good chips, but Broadcom does more in AI and more in data center than NVIDIA does. So that's why I recommend Broadcom, because they're building data centers left and right. And if you didn't know, this company's buying or renting out power plants, whatever you want to call it. They're opening up more power plants just so they can run these data centers. And here's the video.
Google has made a groundbreaking move into advanced nuclear energy. The tech giant signed a power purchase agreement, PPA, with the Tennessee Valley Authority, TVA, to buy electricity from Kairos Power's Hermes 2 demonstration facility in Oak Ridge, Tennessee. This marks the first time a U.S. public utility has purchased power from a fourth-generation nuclear plant. The 50-megawatt reactor, expected to be operational by 2030, will power Google's data centers in Tennessee and Alabama.
Now, the last one I recommend is going to be Newmont Corporation, and this is a mining company. Why do I recommend this mining company? Well, it's because it's the industry-leading portfolio of operation and project. They mine gold. They did a big expansion, and now they're in their growth phase. They're very good company since gold price has been going up and silver price is going up. And the need of gold, silver, and semiconductors, which mean you need gold for these chips. You need silver for some of these chips. You need raw materials. And this company mines it. Now, with the price of gold going up, this one is perfect. Now, you notice that all these are in different sector that I am recommending because I want you to have a good diverse portfolio. Now, how have they been doing? Last year, it grew 62 or 163%. I bought this last year and it had a good growth for me. Now, AI gives it a 2 out of 6 growth. I don't think it's going to be a 2 out of 6. I think it's more of a 5 out of 6 because they already spent all the money in their to expand. Now they're reaping the reward, and they had a growth margin of 52% with a net profit of 17%. Last year, I said it's going to be in a positive, and they spent the last 2 years building the infrastructure for it. Now, guess what they're rewarded for? Last 2 years, they had a negative and then a negative 21%. And now they are making money. So since they're making money, guess what? It's a good stock to buy. And you're going to need the raw material that they mine for all the semiconductor chips being made anyways. So guess what? It's a good one to buy, and it has a pretty good dividend at a 1%. At least it's paying a dividend yield. And those are my 3 stocks I recommend you buy in 2026 and the reason why. Now, you might not agree with all these reasons why, but at the end of the day, the United States is growing. They're going to need raw materials. They're going to need data centers and the cost of the data centers. They're going to need drugs in the futures to help the baby boomers. And that's what I believe and why I say to purchase them in 2026. Now, like, subscribe to my video, and that's all I got for you.